Good day everyone. My name is Deepak, founder and CEO of ICA Property. Today, I'm going to talk about a very simple topic, yet many people have lots and lots of misconception about the same. So the topic that I'm going to cover today is regarding mortgages. So I meet a lot of people and they say buying a property in Dubai is not possible, it's too expensive, we cannot afford it. And when in return I ask them how much rents are you paying, maybe someone is paying somewhere around 70,000, 80,000, 100,000, 150,000. So I tell them, if you can pay this much rental on a yearly basis, then I'm sure that you can easily take mortgage by paying a way lesser EMI compared to the monthly rents that you're paying. So today in this particular video, I'm going to cover a lot of topics. So I'm going to talk about what actually a mortgage is, how you can get a mortgage in Dubai, what are the eligibility criteria, is it only for the ready properties or off-plan properties can also get a mortgage, then what is the process of mortgage. In the end, I will be even talking about, is it better to rent a property or to pay EMIs by taking mortgage. And in the end, there will be a bonus tip that I'm going to give you to make you good wealth. And in this case, when you're taking a mortgage for around 800,000 dirhams, you would like to know how much would be the EMI that you would be paying. So for a 800,000 dirham mortgage with an interest rate of approximately 4 to 4.5%, you will be paying somewhere around 4,200 to 4,500 dirhams as a EMI. So which makes a lot of sense because that is easier to pay. So now let's move on to the next topic. The different kinds of mortgages available in Dubai. So the different kinds of mortgages are: one, conventional mortgage, and second is Islamic mortgage. So the conventional mortgage is basically used around the world. That is, you're borrowing the money from the bank, you're paying the interest and you're paying your EMIs, and that's how you're taking mortgage. But now the next one comes in, that is Islamic mortgage. So in terms of Islamic mortgage, this is basically governed by Sharia law. And in this case, basically you get mortgage, but the money is lended to you in a different way, which is Sharia compliant. So many people around the globe with certain beliefs, they prefer this kind of mortgage. In the end, the idea is same. That is to help in buying the property by paying a lesser amount and paying the remaining over a extended period of time. What are the interest rates that we are talking about? So in Dubai, the interest rate ranges from anywhere between 4% and goes all the way up to 5.5 to 6%. So for a resident buyer or a UAE local, the interest rate are around 4 to 4.5%. But if you're a non-resident, maybe like that is you're not staying in Dubai, then also it is possible for you to take mortgage. In that case, the interest rate are a little on the higher side, that can go anywhere from 5.5 to 6%. So next is eligibility criteria. This is very important because this is where many people have misconceptions. So in Dubai, if you're withdrawing a salary of 10,000 dirhams, you are eligible for a mortgage. So what happens is the bank, they will be checking your salary, your employer, your bank statements, your liabilities, and then according to that, they will decide and they can lend you money. At this point, I want to talk about a very important rule, that is a 50% rule. So this is called debt to burden ratio, or DBR in short. So this is where your salary is basically divided into half. So for an example, if you're withdrawing a salary worth 20,000 dirhams, so what bank will do is they will only assume 10,000 as your salary, like half of what you're withdrawing. And then out of the 10,000, they will see if you have any liabilities. Let's say, suppose you have a car loan and you're paying approximately maybe 2,000 dirhams for it. So in this case, the eligibility for you is that you can pay 8,000 dirhams worth of EMIs. So the kind of property, or basically the amount of property you can buy, will depend on this. So the bank will give you mortgage so that your EMI should not exceed 8,000 dirhams. So it would be lower than that. So always remember this important part. So to take a mortgage in Dubai, you should be at least 21 years old, and the bank can lend you money until the age of 65. And in some cases, and with some banks, it can even extend up to 70 years of the age. But the total duration of the mortgage cannot exceed 25 years. That means if you're 21 years today and if you want to take a mortgage, the maximum tenure will be only 25 years, not until you are 65. And in the other case, let's say you are 50 years old today, you want to take a mortgage, the bank will give you mortgage only for 15 years, not for 25 years. One question that I get to hear from a lot of my investors is, I'm a non-resident in Dubai. Can I take a mortgage? So yes, that is possible in Dubai. So to give you a brief idea, for non-residents, the mortgage eligible for mortgage, but the bank will lend them only 50 to 60%. That means they have to pay 40 to 50% out of their pocket, and the remaining 50 to 60% would be paid by the bank. Ready property versus off-plan property. So in terms of mortgages, the bank will give you mortgage only and only for the ready property. What do you mean by ready properties? The building has a completion certificate. That is one thing for a property which is just delivered. Otherwise, the property is already there and people have been living in. The bank is ready to come and give you mortgage. So in off-plan properties, what happens is you have to pay 50% up from your side. That 50% that you have to pay upfront doesn't need to happen in one go. It can go as per the payment plan, and the remaining 50% is paid by the bank. Now, for off-plan financing, this is only applicable only for few developers like Emaar, Nakhil, Dubai Properties, Damak, Bengati, Shobha, and also in them only a few projects are eligible for this kind of mortgage. Now let me give you an idea about the process of mortgage. So first thing first, we will be talking only about the ready properties. So for a ready properties, if you want to do mortgage, the first thing that a person should do, a proper pre-approval. So that is the bank approving you based on your salary, your employer, your statements, your 50% rule that I talked about, your DBR, that if you are eligible to take mortgage or not. So you apply for the pre-approval, then the bank evaluates all the things, and then the bank gives you the value that you can buy a property worth this particular amount. Now, after this process, you know that you are eligible for this amount of mortgage. Then you can start looking at the property. You look for the property in that particular budget. It can be as per your liking or what suits you best, but I always advise my clients, rather than looking at the price, if the price is slightly higher or slightly lower, doesn't matter. What you should be focusing on is the location, how the developer is. Third, what is the potential of that particular area in future? How is the tenant demand in that particular area? Because these things in the property will not only help you for future, but will help you make a wealth in the coming future. The step number 3 includes between you and the seller. So once you finalize a property, you and seller comes to a term on a particular price point for a particular property. Then you sign a memorandum of understanding, in short called MOU. And in terms of the Dubai Land Department terms, we call it Form F. So the Form F is signed both by the buyer and the seller. So once this is signed, then you apply for the valuation. So in valuation, the bank will send a valuation team which is normally a third-party team which would come and evaluate your property. So the property would be evaluated in terms of the building, locality, the views, the kind of work that has been done in the particular property, and then you will get a proper evaluation of your property. And the bank gives 80% of the valued amount. So you have already finalized the Form F, the evaluation is done, and now the bank will check the evaluation and the agreement that has been done between you and the seller. In this case, what happens is the bank will give you a particular amount, like this much amount the bank will be lending you. Then comes the final part, that is going to the trustee office and transferring the property. So in this particular day, you meet the seller and you go yourself to the trustee. There, the bank will pay the amount to the seller, and the remaining will be paid by you in the form of manager's check to the seller, and then the property would be transferred under your name, and voila, you own a property in Dubai now. So this in whole is the whole process of getting the mortgage. First thing, pre-approval, then finding the right property, then comes the evaluation, then comes the final mortgage approval and signing, and the fifth process is transferring the property under your name. Which is better, buying or renting? So we stick to the same example, that is the property worth $1 million dirham, where you're paying 20% from your pocket and the bank is giving you 80%. So in this case, you will be paying an EMI of approximately between 4,200 to 4,400 dirhams. And if we talk about the same property, the rental for the similar property in the market is currently anywhere between 80,000 dirhams to 100,000 dirhams, which makes to approximately 7,000 to 8,000 dirhams of rental monthly. So now if you compare, what you are paying is basically half of the amount as EMI compared to the rent. So now in this case, you can get an idea. It is any day better to not rent the property but to buy it. The bonus tip that I told you. So this is again came from a lot of my friends or my investors who are asking me that I don't have a lot amount of money to make the down payment, but I can easily manage the EMIs. So what should I do in this case? So in this case, what I suggest is you can look for an off-plan property where you are paying anywhere between 20 to 30 to 40% during the construction. And anyways, when you're buying any property, in that case, the timeline for the property from the day the project is launched to the time it gets handed over is anywhere between 2 years to 4 years, depending on how big or vast the project is. So what you can do is you can put some money from your side, the savings that you have, and also there is an option that you can take personal loan from the bank. So by the time your property is ready, and now you are eligible for mortgage since your property is ready, and now for rest of the amount you can take the mortgage. So this is one of the most simplest way where by paying a small amount you can actually build your wealth. I understand a lot of you must be having a lot of questions regarding this, or if maybe I missed out something. I tried to cover all the topics I could. You can reach out to us. We will be very happy to help you. And any questions you can leave down even in the comments. We will answer them. And stay tuned till the next video.